There are some months in trading where you don't need a new strategy, you need a 30-day emergency plan just to stop the bleeding. I remember one of those months like a scar. Not because it was my losing month in dollars, but because of how it felt. Every day had the same pattern. I'd wake up swearing, "Today I'll be disciplined," and go to bed thinking, "How did I mess it up again?" If you're here, maybe that sounds familiar. You're not clueless. You know basic technicals. You understand risk, reward in theory. You've watched more trading videos than admit publicly. But your account is a different story, a slow, steady leak, occasionally into a disaster. This video isn't for the trader hunting their next 10x. This is for the trader who secretly thinks, "If I could just go 30 days without doing anything stupid, be in a better place." That's exactly what this 30-day turnaround plan is about. I first started studying Jesse Livermore seriously, not as a legend, a flawed operator. I realized something that kept his life. Whenever he got into serious trouble, his path back was never mystical. It wasn't about finding a magic ticker or a perfect timing tool. It was always about going back to daily rules. Not dreams. Not P&L goals. Daily rules. Like a recovering addict treats clean days. One day right. Then another. Then another. 30 days doesn't sound like much. Tried to go 30 days. Revenge trading after a loss. Adding to obvious losers. Trading when you know your head isn't right. Trade just because the market is open. Livermore's greatness wasn't just in the huge campaigns you hear about. It was in the stretches where he served self, where he focused more on not losing than on winning big. This 30-day plan is my modern adaptation of that mindset. Documentary-style breakdown, I'm going to walk you through a structure you can follow. How to frame the next 30 days not as a get-rich-spree, as an emergency stabilization phase. How to identify behaviors that are doing 80% of the damage to your account. How to build non-negotiable daily rules, inspired by Livermore's own principles, that you can review and track. Design your day so it's actually harder to blow yourself up. And how to measure progress without obsessing over every single trade result. For the next 30 days, you're not trying to become a genius. You're trying to become reliable. In the section I'll take you through the inner conflict that keeps you stuck between "I want to stop" and "I can't help it." The psychological trap that makes you repeat the same losing patterns. Livermore's way of thinking about bad periods in his trading life. A real 30-day stretch from my own journey where I used strict daily rules to stop from bleeding. And finally, a detailed, day-by-day framework you can plug into your own life starting tomorrow. If you've ever looked at your life and thought, "Forget doubling this account, I just want it to stop dripping lower," then this 30-day turnaround is the mission. We're not promising miracles. We're promising control by step, day by day, rule by rule. There's a brutal paradox at the heart of every 30-day "I'm going to fix this" promise we make to ourselves as traders. The very urgency that makes you want to change is the same urgency that keeps you bleeding. Let me explain what I mean. Think about the last time you told, "That's it. I'm done trading like this." Maybe it came after a day. Maybe after a slow, grinding month. You saw the numbers, felt that sinking feeling in your stomach, and the next month will be different. In that moment, you were sincere. You meant it. You were tired of clicking out of pure frustration. Adding to losers one more time. Forcing trades just to feel in control again. But inside that same moment, another voice speaking, but just as powerful. 30 days is a long time. You can't just sit on your hands. You have to make it back. And there it is, the inner this 30-day turnaround plan has to deal with head-on. On one, you want stability. You want to stop waking up anxious about your account. You want to stop explaining to yourself why next month will be better. On the other side, you crave redemption. You don't just want to stop losing, you want to undo the damage. You want to see the snap back up, quick, so you can feel safe again. Livermore lived inside this conflict his entire career. He'd have periods where he stuck to his rules, built his campaigns slowly, and watched his capital grow with discipline. Then he'd hit a stretch where he felt the need to make it back or press while the going's good, and that's when the trouble always started. He understood, eventually, that there are really two traders in each of us. The one who wants to trade well, and the one who wants to feel better, fast. The problem is, a 30-day requires you to side with the first trader, while the second trader screams in your ear every time the market opens. That's the paradox. You can't stop the bleeding and satisfy your craving for content. You can't go on a genuine 30-day repair while still expecting every day to give you something exciting to do. If you try to do both, take it back fast, you end up trapped in trading smaller, but more often, cutting winners early to lock something in, holding losers longer to give them room. Daily rules by day 3 because this setup is too good. Livermore's experience is a warning here. Every time he tried to bend his rules just a little to speed up the recovery, the market punished him. Maybe not that day, maybe not that week, but always eventually. Serious about a 30-day turnaround, we have to accept up front. For the next month, your primary job is to grow your account. Your primary job is to rebuild the trader who manages that account. The money might follow. It might not, yet. But the habits you either strengthen or destroy in these 30 days will decide what happens over the next 300. In the end, I want to dive into the psychological trap that makes this so difficult, the way your brain has been conditioned by random rewards and painful losses to sabotage your own rules, even when you know those rules are the only thing that can save you. And your fresh start from tomorrow keeps collapsing by day 3, and it's not because you're weak or stupid. It's because your brain has been trained by the market in all the wrong ways. When I finally faced that, it started to change. Most traders think a 30-day turnaround is just about more willpower. Trade less. Don't revenge trade. Don't add to losers. Simple, right? But if it were just about rules, you'd already be fine. You know most of the rules. You know you shouldn't go all in. You know you shouldn't move your stop just this once. You know you shouldn't open 5 trades that will feel left behind. And yet you still do it. Why? Because your nerve has been rewired by what psychologists call random reinforcement. Think back over your last few months of trading decisions. You chased a breakout with no plan, and it worked. You added to a loser one last time, and it bounced. You ignored your stop because, and it actually did. Those wins weren't victories. They were poison. Each one taught your emotional brain. See? The rules are optional. Your impulses aren't as dangerous as people say. You're different. You can handle it. Then on the other side, you waited patiently for a clean setup, and it failed. You cut a loser at your planned stop, reversed right after. You sat out on a choppy day, and of course that was the day something ran without you. Those moments taught your brain a second lie. Discipline equals pain. Equals missing out. Rules equal regret. So now, fast forward to your 30-day turnaround. You sit down with noble intentions. This won't force anything. I'll wait for confirmation. I'll respect my stops. But the moment a fast mover pops up on your screen, your emotional brain isn't thinking about your 30-day plan. Remembering every time recklessness got rewarded and discipline got. It whispers. Last time you thought too much, you can always tighten the risk later, just get in. You need to make it back, this could be the one. And just like that, the rulebook loses the conditioning. Jesse Livermore went through the same loop, just without the smartphones and social media. He had early periods where wild speculation worked, blind buying in bucket shops, over-leveraging, listening to tips. It made him money at first. Enough money to make his instincts were special. So when he later tried to act like a professional, planning, testing with small positions, he had to fight against his own memory of being rewarded for playing like a cowboy. The old kid didn't disappear just because he decided to be serious now. That's the when I face in any 30-day turnaround. Not starting from zero. You're starting from years of random reinforcement, where bad behavior sometimes paid and good behavior sometimes hurt. Until you accept that, you'll keep trying to fix a logical problem with a moral solution. I'll just be stronger next time. Livermore eventually realized he couldn't outmuscle his own wiring. He had to structure it. He didn't just write rules, routines that made it harder to impulse and easier to act on discipline, one day at a time. And that's where this 30-day begins, not with faith and willpower, but with respect for how rigged your conditioning is. In the next section, we'll step fully into Livermore's perspective, how he thought of periods, what he considered acceptable damage, and how his daily rules acted as guardrails when his own mind was trying to sabotage. When I really started reading Livermore, not the quotes on Instagram, but the actual stories of his campaigns, his failure notes, one thing stood out to me. He didn't treat them as a mystery. He treated them as a signal that his daily rules had slipped. Livermore had wild swings in his career, massive fortunes made, massive fortunes lost. If you just look at the numbers, it's easy to think he was chaotic. But inside that chaos, he was told something very specific, a daily standard for how a serious trader behaves. He knew cold markets. He knew there would be drawdowns. He knew this where nothing worked. What terrified him wasn't seeing red on the ledger. What terrified for the wrong reasons. In his world, every period could be separated into two phases. A phase where he was obeying his rules and letting the tape guide him. And a phase where he had started trading himself, his boredom, his ego, more than the market. When things went wrong for a stretch, he didn't immediately blame the market. He asked, "Still trading like the man who built this stake? Or like the boy who used to gamble in bucket shops?" That's exactly the question that sits at the core of a 30-day turnaround. Livermore's perspective on a losing period was not, "How do I make it back?" It was, "How do I stop digging?" He would cut down his position size, reduce the number of trades, become more selective about which stocks he even allowed himself to touch. Some aside almost completely, watching the tape without participating until he felt his judgment reset. In modern language, he put himself on a risk diet. Underneath that behavior was a philosophy that shifts how you view a month of trading. First job in a bad period is not to win. First job is to survive yourself until clarity returns. He viewed daily as his lifeline in those times. Simple things like no adding to a losing position, no trades against the main trend, no new positions when I'm disturbed, no trading size until I'm in sync again. Suggestions for him, they were boundaries. I mapped that onto my own trading. Realize how often I've treated as flexible, especially periods, exactly when they should be the most. I'd say things like, "I know I shouldn't revenge trade, but I'll just take one more small shot. I know the market is choppy, but I need to make something back this week. I know I'm tired, but this setup looks too good to ignore." Those are the moments Livermore waste instantly, not as market problems, but as character problems. He believed a trader's daily mattered more than their latest P&L swing. That's why, in trouble, he didn't look for ideas, he looked for discipline leaks. His turnaround always began with returning to a simple, repeatable rules he could hold himself to in weeks at a time. That's the lens we need for this 30-day plan. You're not designing a method. You're designing 30 days of behavior Livermore himself would recognize as professional, regardless of individual trade out. In the next section, I want to bring this down from a single concrete story, a 30-day stretch in my own trade, applied Livermore-style daily rules, what I tracked, what broke, what held, and how that month didn't fix everything, but it finally stopped the bleeding long enough. There was one month where I finally said to myself, "I don't care about making month. I just want to prove I can go 30 days without destroying myself." It didn't start noble. It started desperate. The previous been a mess. Not because I didn't have winning trades, I did. Time I built something, I'd torch it with one or two emotional decisions, oversizing, revenge, refusing to cut what I knew was dead. The result? My equity curve looked like a heart monitor for someone running up and down stairs. Spikes. Hard drops, no real progress. Just volatility. So at the beginning of this particular month, I pulled results and did something that hurt. I ignored the dollar amounts and focused only on the behavior tag heartedly tracking. I filtered trades by. Followed plan. In sync with market versus forced. Calm state versus emotional state. And what I saw was almost embarrassing. A huge portion of my worst damage came from a small number of patterns. Trading right loss. Trading in obviously choppy markets. Adding size mid-trade without a written reason. Taking trades outside my core setups because this was good. The P&L didn't bother me, that pattern did. It was like seeing the same bad scene in a movie, on repeat. That's when I decided. For the next 30 days, my only goal is to eliminate these patterns, even if it means I make almost nothing, or even while I adjust. Inspired by Livermore, I set daily rules instead of P&L goals. Here's what I wrote on a sticky note and stuck to the bottom of my monitor. 1. No trading in hostile markets. Each morning, I labeled the market as neutral or hostile based on trend and volatility. If it was hot, I could watch but not open new positions. 2. No new trade within 30 minutes of a stop. If I took a loss, I had to step away, literally stand up, walk, breathe, before even skin. 3. Maximum 2 setups per day, both for playbook. Hit 2 trades, I was done initiating. I could manage existing positions, journal, and review, no new risk. For no adding to any position, it was already working and I'd written the ad plan before. 5. End of day review, tag every trade as necessary or unnecessary. Day 1 felt strange. I followed the rule, took one small trade in a neutral market, scratched it for a tiny loss, spent the rest of the day not forcing anything. My day? Slightly red. But I went to I didn't hurt myself. That's new. Day 3, I hit my first real test. Took a clean loss early. The old me would have slammed into something else to fix the feeling. The 30-day of me stood up, made coffee, and stared out a window for half an hour. By the time I sat back down, the urge to get it back had faded for me to see how dangerous it is. I stuck to the rules. No more trades that day. By day 10, something's happening. My account hadn't exploded, but the volatility of my equity curve had dropped massively. The waterfalls were gone. The jagged cliffs were smoothing out. I still had down days. I still misread the market sometimes. But the losses were smaller, and most importantly, intentional. I could point to every red trade and say, belonged here. That was tuition, not self-harm. 30 days, my P&L was modestly up. Nothing impressive from the outside. But internally, it felt like a revolution. Trades tagged unnecessary. I had 0 revenge trades. I had 0 days where I broke all my rules after lunch. That month didn't make me rich. It made me credible, and once I finally had something to. In the next section, we'll step into the emotional loop, and during that 30 days, the moments where I wanted to quit the experiment, break the rules just this once, or speed. Because those turning points, handled the Livermore way, are exactly where a plan either collapses, or hardens into a new identity. Every 30-day plan looks clean on paper. It's the middle where it tries to break you. For me, that hit around day 14. Not at the start, when motivation was high. Not at the end, when the finish line was in sight. Right in when the novelty had worn off and the doubt started, is this even worth it? The first week of the plan had gone. Fine. No meltdowns. No revenge trades. Massive drawdowns. No huge wins. What I felt, more than anything, was bored. Like I had put my trading into a cast, and now I ran with it while the real action happened somewhere else. I remember one morning clearly. The market opened strong, and a stock I'd traded before, let's call it DRX, exploded right out of the gate. Big gap. Huge volume. Social feeds lighting up. This was the kind of move I used to live for. My pre-market prep had labeled the environment as hostile. Choppy prior sessions. Key news event ahead. Index near resistance with widening intraday ranges. According to my 30-day rules, I was allowed to watch, but not to act. I sat, watching DRX surge without me. 10%. 15%. 20%. The old me screamed. This is what discipline, missed opportunity. That's where the emotional low point really hit, not a day, but on a winning day I wasn't part of. Suddenly, the rules felt less like more like punishment. I felt stupid. Slow. Left behind. The thoughts came fast. What's the point of all this if I'm just going to watch trades like this go by? No one to bend their rules, you're being rigid. Just this once. You've been good for 2 weeks. Wait. And here's the scary part. I could have justified it. I could have told my Livermore pressed when he saw a real runner, or I'll just risk small, it's still win, sort of. But deep down, I knew the truth. I wasn't. The setup was perfect. I was tempted because I was uncomfortable being disciplined when it didn't immediately pay. That's a completely thing. So I did. That felt almost pathetic in the moment. I closed the form. ERX on the screen, yes, but minimized. Opened my stat and wrote exactly what I was feeling, sugarcoating it. I feel my own rules right now. I feel like I'm while everyone else is eating. I want to break the rules not because it's a good trade, but because I'm tired of feeling left out. Seeing that hurt, but it also exposed the illusion. My fight wasn't with the market. My fight was with the part of me that believed discipline must immediately or it wasn't worth it. That's where Livermore's experience echoed the loudest. He went through long stretches where careful trading didn't bring quick glory. He wrote about how the hardest thing wasn't losing money, it was holding steady when doing the right thing for a while. That day 14 moment became a... For the first time I decided that the success of this experiment would not be judged by P&L. One question only. Did I keep my word to my... That night, the answer was yes. I had ERX. I hadn't broken my rules. I'd swallowed effort and chosen consistency over excitement. It did heroic. It felt small, quiet, but solid. And from that day on, the plan stopped being a challenge and started becoming a new standard. In the next section, I'm going to turn this emotional battle into a clear breakthrough rule principle of a 30-day turnaround, and the mindset daily rules from a prison into a protection. If I had to compress this entire 30-day turnaround into one rule, a single sentence you could write above your desk, it would be this. For 30 days, my success is measured by rules, not by P&L. That's it. Simple to say. Brutal to live. Up until that 30-day stretch, I measured everything like most traders do. Good trader. Red day. Bad trader. It didn't matter how I behaved. If I walked away with money, I called it a win. If I walked away with a loss, a failure. The market had me on a short emotional leash. It could yank my around with a couple of candles. I started looking at Jesse Livermore through this lens. Something changed. He didn't blow up because he didn't know enough. He blew up when he stopped obeying rules, especially during emotional, high-pressure periods. He wrote, again and again, that his greatest mistakes weren't analytical, moral, in a trading sense. They were betrayed he already knew to be true. Don't average down a losing position just to avoid taking a loss. Don't trade heavily when you're out of sync with the market. Don't go against the main trend without extremely good reason. Don't let tips, noise, or boredom override the evidence of the tape. When he respected those, even his losing periods were survivable. When he broke them, his fortunes vanished. That's when I realized. A real 30-day turnaround can't be built on outcomes. It has to be built. So I changed the scoreboard. Instead of asking at the end of the day, did I make money? I started asking, did I behave like the trader I'm trying to become? If I followed my environment filter, stuck to my 2 setup limit, revenge trade, and logged my decisions even on a red day, I counted that as a win. If I made money but broke my rules, chased, or got lucky on decision, I logged that as a loss, a red mark on my 30-day scorecard. That single shift did 3 powers. It broke the emotion. The market could no longer control my spec with one bad candle. A losing trade taken within my rules didn't destroy me, into the tuition category. It exposed my... I could no longer hide behind the market as hard. My journal showed clearly, most of my real damage came from, not randomness. It made moderation feel like progress. A quiet, boring day where I took one small, valid loss but followed every rule in the old adrenaline-filled days of big green or red. That's the core of a Livermore-style turnaround. You stop trying to be the trader with the biggest single-day gains, and you start trying to be the trader with the fewest self-influence. You stop worshipping good trades that broke your rules. and start good behavior even when it leads to a small red number. And over 30 days, that new scoreboard builds something priceless: trust in yourself. Not because you're perfect, but because you're consistent. In the next section, we'll plug this rule directly into the modern trading environment: screens, social options, crypto, and how to run this 30-day standard in a world where everything is designed to drag you back into impulsive thinking. If Jesse Livermore walked into setup today, multiple monitors, broker own, Twitter green, Discord alert in the background, he wouldn't say, "This is a different game." He'd say, "Same game. More traps." Because the core issue we're attacking with this 30-day turnaround, the battle between rules and impulse, is exactly the same now as it was in. The difference is that our impulses are being poked 1,000 times a day by design. Think about what your average trading day looks like in 2025. Before you even open your platform, your phone shows you overnight futures moves, 500 into 5,000 in one trade screenshots. People bragging about some crypto spike at 3 a.m. When the market opens, scanners and social media pump out gainers. Unusual options activity. Breakout alerts. AI says 80% probability this goes up. Every piece of environment is screaming, "Act now. Miss it. You're behind." And in that storm, your 30-day plan quietly says, check the environment, limit the setups, follow the rules. And if you're not right, no wonder it feels hard. You're trying to run Livermore's mindset on top of apps built to trigger the exact behavior that destroyed him. That's why the rule obedience, not P&L standard, is so powerful in a modern context. It gives you a completely different axis to measure yourself on in a world obsessed with screenshots and single trade outcomes. Here's how it really plays out today. You're in a choppy, news-driven market. Your pre-market process labels it hostile. Old you would still take 5 trades because something is always moving. New you, for this 30-day stretch, maybe takes 1 kiss trade, or none. At the end of the day, you don't beat yourself up for missing the random runner. You ask, did I honor my hostile day rules? A hyped stock is trending on Twitter. Everyone's posting gains. But it doesn't fit your playbook, the spreads are wide, and the chart is a mess. Old you would justify entering in, it's working for everyone. New you takes a buzz. Not my setup. Not this month. You take rule following loss early in the. Instantly, your feed shows someone else hitting a big win. Old you would fire up a revenge trade on the next moving ticker. You writes in the journal, necessary loss. Max one more setup today. And when that second setup doesn't appear, you stay flat. Equity stays stable. Self-trust goes up. That's Livermore in a modern skin. He'd use tools, screeners, platforms, maybe even some data. But he would still anchor everything to a few core questions. Is this environment favorable enough to play aggressively? Is this instrument really showing leadership, or just noise? I know exactly where I'm wrong before I enter. Am I trading because the tape is calling me, or because my emotions are? Our 30-day daily rules are just those questions turned into constraints. No hostile conditions. Only core setups. Hard limits on number of trades and revenge windows. End-of-day behavioral scoring, not just P&L review. In a market week's progress in one angry swipe on your phone, this isn't overly survival. The more noise, speed, and leverage the modern world throws at you, the more valuable 30-day period of deliberate constraint becomes. Trying to survive the next headline, you're respond to all of them. In the next section, I'm going to take everything we've talked about and turn it into a clear, by-step 30-day turnaround blueprint: what to do before the month, what to track each day, how to score yourself, and how to walk out of those 30 days with a different relationship, rules, and yourself. Now let's turn all of this into something you can actually run for the next 30 days. Think of this as your Livermore 30-day reset, a practice to stop the bleeding and rebuild your identity as a disciplined trader. Break it into 3 layers. 1 pre-30-day setup, what you do before day 1. 2 daily rules and routine, what you do every trading day. 3 weekly review and adjustments, how you course correct without blowing up the plan. Keycap 1 pre-30 days, build the guardrails. Before day one even starts, you sit down, no charts, no P&L, just your journal and your honesty. Step 1. Identify your top 3 bleed behaviors. Look back over the last 1 to 3 months and ask, what specific behaviors caused worst losses? Common culprits. Trading or a big loss. Adding to losers without a taking random setups outside your playbook. Oversizing in dead or choppy markets. Trading when angry, tired, did. Write down your top 3. These are the habits we're targeting. Step: define your market condition labels. Borrowing from Livermore on the line of least resistance, create a simple daily label system. Favorable, trend is clear, volatility is orderly, your setups are recently. Neutral, mixed signals, some chop, your setups are hit or miss. Hostile, wild volatility, big news, choppy index, you've been failing. This will dictate your allowed risk and trade frequency each day. Step 3. Choose your core setups, max 2 to 3. For 30 days, trade only your best patterns. Write them down with options. Entry logic. Stop logic. Typical targets. Everything else goes into the observation-only box. Key cap rules and routine, the structure. Now we define what one discipline day looks like. This is where we our rule obedience P&L. Morning block, before market opens. 1 market condition check minutes. Label today, favorable, neutral, or hostile. Based on label. Favorable normal size, normal number of trades. Neutral half size, max 2 trades. Hostile watch only or micro size, max 1 trade setup. 2 state check, 2 to 3 minutes. Ask yourself, tired, distracted, angry, or rushed? Did something outside the market already put? If yes, you automatically reduce size or number of trades you're allowed. Some days, no trading. That's part of the plan, not a failure. Daily intention. Right. Today I measure success following my rules, not by making money. During market hours. These are your non-negotiable daily rules for the 30 days. 1. No trading outside core setups. If a trade doesn't match your written setup, no, even if it runs 50%. Rule 2. No adding ever. Hits your stop where thesis breaks, you're out. No just average. Rule 3. Cool down after a loss. If a trade hits your stop, 30 minutes minimum with mates. Leave the screen, reset. Rule 4. Daily trade. Favorable, max 3 trades. Neutral, max 8. Hostile, max 0 trades, or none. Rule 5. No P&L chasing decisions midday. You're not allowed to change your risk or trade more just because you're red or flat. All changes must be before the session or after it, not in the emotional middle. End of day review, 15 to 20 minutes. After, you rate the day on behavior, not on money. For each trade. Setup, core or random. State, calm or emotional. Loss type, necessary, rules, or unnecessary, rule break. Then score your day on a 1 to 5 scale for rule obedience. 5 equals rule, no exceptions. 4 equals 1 small slip, corrected quickly. 3 equals some rule breaking, caught myself late. 2 multiple breaches, reactive day. 1 equals full abandon, emotional trick over. Your 30-day success metric becomes, how many 4s and 5s can I string together? Key weekly review and adjustments. Every 7 days, zoom out. Count necessary versus unnecessary losses. Goal, unnecessary trending towards 0. Look at your rule obors. Are you improving, flat, or slipping? Note any rule that feels impossible to keep. Is the rule unrealistic? Or are you trying to trade too much size or frequency for your current emotional bandwidth? Adjust the rules if needed, but only between, never mid-tilt. That's how you respect the structure and avoid editing to justify my feelings. If you run this for 30 days, or might not explode upward, that market. But your bleeding will slow, your worst will lose power, and your sense of control will return. And that is the real win of a Livermore-style 30-day turnaround. You don't just change your results. You change the person placing the trades. In the final section, I want to bring this cinematic close, a reminder of who you were when you started this journey, who you're trying to become, and a question I want you to answer. Lock in your own 30-day commitment. There's a version of you already knows very well. It's the version that wakes up with goods, and still finds a way to break every promise by the closing bell. The version that says, "This time I'll be disciplined," then chases a runner 10 minutes after the open. The version that cuts winners fuck it in, then nurses losers because it'll come back. The version that goes to bed scrolling through other people's results, wondering why your own equity curve looks like it's going down in the dark. The market has met that many times, and it has fed on them. But there is another version of you, one you've only seen in flashes. The version that can sit in cash on a bad day and feel calm, not useless. The version watch a stock rip without thinking, "I'm an idiot for not being in." The version that closes a losing trade at the planned stop and, instead of spiraling, necessary loss. Next version is who this 30-day turnaround is built for. Not the fantasy trader you world, but the serious operator you're trying to become when the screens are off and the room is quiet. Here's the truth Livermore eventually learned the hardest way. You do not turn your trading around with one giant win. You turn it around with 30 quiet days of not destroying yourself. 30 days of respecting your environment labels. Being your real setups. Stepping away instead of diving back in. Obeying your daily limit when you feel behind. Rating yourself on behavior, not P&L. Something subtle but irreversible happens. The market stops being your judge. Your rules become. You're no longer asking, "Did I impress the market today?" You're asking, "Did I honor the standard I set for myself?" That's the essence of a Livermore act. Not worshipping the days you got lucky, but building a life around the days you stayed in control. This 30-day window is not about proving you're a genius. It's about proving you can be trusted with your own capital. And once you can trust yourself, then, and only then, does it make sense to ask the market to trust you with bigger size, bigger ambitions. So here's what I want from you. Comment below. Are you willing to commit to 30-day turnaround, measuring success by rule obedience, not P&L? Yes, write one line. Day 1 starts for me on, date, 1 bleed behavior I'm eliminating is ___________. Seal it in public. Because 30 days from now, the candles will look the same, the headlines will look the same, will sound the same. But you don't have to be the same trader the market has been eating alive. You can be the one who finally decided. I will still lose. But I will no longer lose for the same stupid reasons.